benchmark indices continue to extend losses. Nifty slips below the 21,600 mark, while Sensex trades near 71,700, down over 500 points. Broader markets in tandem. Most sectoral indices in the red, auto and IT in pain. Meanwhile, Pharma emerges as the top gainer, rises over 2%. Nifty Pharma is the sole shining spot in the markets, hits life high in early trade, gains over 1% led by Lupin and Glenmark. Iran sends a warship to the Red Sea after the US Navy destroyed 3 Houthi boats. Crude rises over 1% as traders expect geopolitical tensions to escalate. And Adani Group Chairman Gautam Adani says most challenging year ends with strength and integrity validated by Supreme Court panel.
Hello and welcome. This is Hot Money. I am Agam, Vakil, and with me is Hiral, Dadia. We're going to take a look at the markets, which are quiet at the moment. We're looking at flattish movements, for at least as far as the last 1 hour of trade is concerned. While we did see a lot of weakness earlier on in the day, it seems like markets, at least for now, have arrested the fall. We are still looking at the Nifty down by as much as 0.6%, the Sensex down 0.8%. The Bank Nifty as well is showing some amount of weakness because that's also down 0.7%. But about a consolidation perhaps over the last couple of hours of trade. And the question is, where do we go from here? Do remember that it is the Fin Nifty options, weekly options expiry as well. So that, index will be in focus along with its constituents, which have been rather erratic and have seen a lot of traction in yesterday's day of trade. But to very quickly address what's happening in the broader markets, and I want to take a look at, so the broader markets are also coming off largely in tandem with the benchmarks. But when it comes to your big movers as far as your broader markets are concerned, that is what I wanted to talk about. I'm just going to pull up a handful of names out there to see where, in fact, we do see a lot more traction. So, a whole host of pharma names, something like a Gland Pharma, something like an Alembic Pharma, something like a Biocon. All of them are up and about in trade, advancing substantially as well. So, good gains coming in there. And that perhaps remains the big theme of today, at least, because it is essentially some of your pharma names which are advancing and perhaps giving a little bit of support to the broader markets along with the benchmarks. But on the whole, otherwise, it's been a fairly quiet hour of trade, Hiral. We're going to have to wait and watch whether or not we start seeing a little more traction as we move on to the final couple of hours in today's day of trade.
Absolutely. It's going to be interesting because yesterday we did see that plunge that happened at 3 p.m. where it was Bank Nifty that took the plunge and taking that contagion to the other part of the markets as well. But let's see how today's day pans out. But let's quickly shift focus to stocks that we will be focusing on. In today's session, we'll have Devarsh, Vakil, Deputy Head of Retail Research at HDFC Securities, also who will be joining in. We have auto sector that will be in focus on the back of the auto sales data that has trickled in for the month of December. Apart from that, you have all the EV players that have been in focus as well over the last couple of trading sessions on the back of the government statement with regards to 800,000 diesel buses that will be converted into EV in the next 7 years. Pharma sector, volumes are absolutely strong. You have a Nomura, which has increased target price on Lupin, and you have a Torrent Pharma where NDTV Profit did access the US FDA observations. So these are few stocks that are in focus. Ultratech Cement as well on the back of the quarterly update. Lemon Tree, again, Motilal Oswal has come up with a report on a Lemon Tree, and that stock has been buzzing in trade. And you have FMCG, Nestle and HUL that are in focus. So these are stocks that we will be discussing in trade today. But heads up first, let's understand how the auto sales numbers for the month of December have panned out, because clearly it has been an absolutely mixed bag. Some bit of a slowdown that has continued with regards to passenger vehicles. Now remember, the clear problem with passenger vehicles was the high inventory that the companies were sitting on. Apart from that, if you see the two-wheelers, that has seen a rise as well. Let's head across to Himansh to understand more and give us a roundup. Himansh, over to you.
Thanks, Hiral. So, like you have mentioned, passenger vehicles have come in a bit of a slowdown, and that's actually along expected lines because, like you mentioned, they were sitting on high inventory. I think Nomura last month highlighted that they estimate about 45 days of inventory levels in the passenger vehicle segment, and hence you're seeing the drag come in there. And this is reflected in Maruti Suzuki's numbers that have come in lower on year as well. But what's really stood out is the two-wheeler that continues to be robust, partly on a low base, but also because of the rural demand that has recovered, and you are seeing good offtake in terms of the motorcycle segment that's coming in. You're also seeing Bajaj Auto's two-wheeler sales that have risen on this counter. Now, in terms of exports, we earlier had a conversation with the management from Bajaj Auto as well that highlighted that exports have remained tepid. They do expect a bit of recovery coming in after the freight issues are resolved. But moving on to commercial vehicle segment, it is expected to remain robust on account of strong infrastructure developments in the coming time. And lastly, you have tractor sales that have disappointed. Escorts Kubota dispatches fell 19% lower this time around on lower dispatches, and this is primarily due to lower crop harvest, Rabi harvest being lower than expected, as well as both on the retail and wholesale fronts have been upsetting, and that's been the key dragging factor here at play. Auto stocks on a whole were on the slow lane today, largely trading in the red.
Right, so that's with regards to where the auto sales data is concerned. Let me head across to Devarsh Vakil to get his views. Devarsh, how are you looking at the December numbers, and what would your top picks be if you have to look at passenger vehicles, CVs, as well as the two-wheeler space?
So, the numbers have been a little disappointing, as our colleague pointed out. The volumes dipped on month-on-month basis in many of them, despite this being a seasonally strong months. November, December usually do give higher sales and revenue to these numbers, to these companies. So that is quite disappointing, and volume growth, despite the not increase in prices last couple of months, is a worrying factor. I think these companies now will have to do some kind of juggling for the volume growth in first quarter. So I'm expecting January, February, March to be a little subdued for them. And as many of them stocks have already run up, like Bajaj Auto and others, we are actually a little cautious on the sector. We have reduced rating at stocks like Bajaj Auto and others. TVS Motor, as I have pointed out earlier also, is one of our picks where we continue to like on the two-wheeler side. Others like Bajaj Auto, Eicher, Hero Moto, where we have now come out with a reduced rating after these numbers. Tata Motors also is not a buy in our list. Only TVS Motor looks good for a longer term perspective, and maybe Mahindra & Mahindra and Maruti at lower levels can be added. So these are the three stocks where we continue to be little constructive.
Right, so, a mixed view coming in from Devarsh as well. In fact, let's just listen in to what the managements of Maruti Suzuki as well as Bajaj Auto also had to say.
Generally speaking, the auto industry growth is very closely related to the GDP growth, the per capita GDP growth. And there the projection so far is about 6.5% or thereabouts. And that's very positive because there is a very high correlation between the auto industry growth. In fact, correlation, statistically speaking, the R square factor is about 0.983, which is a pretty high correlation. So anything which negatively affects the overall economic growth would affect the auto industry growth as well. Of course, auto loan rates, if they were to go up, will also adversely affect because 80% of the retails in the industry happens through the auto loans. And therefore, any interest rate hikes there would be negative for the industry. Also, the fuel prices can go either way. Because of the geopolitical situation, it's possible that you could see spikes upward for the fuel prices, or if everything happens okay, you could even see a lower demand if overall demand for energy comes down, depending on the economic growth in other countries.
Triumph has had a very good impact. We launched in end of July with one model, and then we have followed it up with introduction of the Scrambler in October. And both the offerings have been received extremely well. We are building an exclusive network for Triumph. So as of date, we've got about 55 stores over there. Last month, our retails were about 2,800 units or so. But, one has to look at the fact that these were perhaps in about 40 to 45 stores only, and because the rest of the stores came up in the second half of December. And in some places, the acceptance is such, like, Kerala, we are in Cochin and Trivandrum, which is a very important market for this class of motorcycles.
Okay, and we put the focus now on another sector, and that's the pharma sector. I want to pull up very quickly all the big gainers in that particular index. In fact, most of the counters in that index are in fact gaining. It's up and about in trade, one of the biggest movers as far as the index goes. On an index level, one of the biggest gainers today. And we have gains in Lupin, GSK Pharma, Glenmark, Gland Pharma, Biocon, Divi's, Sun Pharma, Zydus Lab, all of them up and about in trade, save for something like a Natco Pharma, which is marginally in the red. Among many other updates that we do have, we have a US FDA approval for something like an Alembic Pharma. We have a US FDA approval for something like a Torrent Pharma as well, which is up and about. We have an update from a broking house when it comes to Lupin, and so a lot of factors coming together and playing in favor of the pharma sector. Let's not forget that we could likely be seeing a little bit of a catch-up as well, considering it's been a little bit on the defense of late, and we are likely seeing that gain. Of course, I'm not talking about Lupin, especially because Lupin has seen its fair share of gains already through the course of the last couple of weeks of 2023. That said, we're still seeing gains today as well, up and about, and giving that entire index that impetus that it needs to in order to catch up with the rest of the markets. Devarsh, what's your view on the pharma space? And among the names that we have mentioned, or the ones that you're tracking, any that stand out for you at the moment?
No, Agam, actually, we are quite bullish on pharmaceutical as a sector. Large pharmaceutical players like Sun Pharma, Dr. Reddy's, Cipla, and Zydus, they have delivered a strong set of numbers led by the specialty products in the global markets and also healthy growth in the domestic market in the first half. The domestic business continues to see healthy growth for the most of the Indian players. Indian pharma company has been investing in fields like biosimilar, innovators. They are doing some bit of complex injectable capex also. So all these are likely to drive growth. On the international side also, we are seeing that the price erosion which was happening has stabilized, and now we are not seeing much of a erosion in US. So that will help the steady growth for the players who are playing in that market. So overall, and bit of sectoral rotation, as you pointed out, other pockets of the markets are looking little stretched to us. So there is natural that the fund managers and the investors would like to put money in the area where we haven't seen much growth. So I think this sector is poised to outperform, led by the strong growth in the domestic formulation business and the healthy traction in the international markets. These niche product launches are going to keep investors excited about this space going forward.
Right. Okay. Devarsh, stay with us. We'll slip into a quick break. On the other side, we talk about stocks and a lot more. Stay tuned to NDTV Profit.
Welcome back. You're watching Hot Money, but let's quickly pull up first the flashes that are coming in from the coal ministry. If you talk about the December production, that has seen a growth of almost around 10.8% on a year-on-year basis. Along with that, if you see from a dispatch perspective as well, it's up around 8.4%. So that's what we are picking up from the coal ministry so far. Let's just quickly pull up Coal India on the screens and see what that is doing in trade. And what's interesting is even Coal India came out with their December production, which has also increased around 8.2%. So for the full period of April to December, production has grown by 11% tons as well. That's the update we're picking up on Coal India. The stock is seeing gains of almost 2.5-3% as we speak. But moving on, Lemon Tree Hotels, that's the stock to focus on. In fact, strong moves coming in on that counter. You have a Motilal Oswal, which has reiterated its buy rating. Let's understand from Mahima as to what's the reason for Motilal Oswal being bullish, and then we'll head across to Devarsh as well to get his view. The stock is up a little over 11% in trade. Mahima, over to you.
Right, Hiral. So as you rightly mentioned, Motilal Oswal has reiterated buying with a target price of 150 rupees. Now, this is on the back of multiple reasons that are mentioned in the report. The first one being that Lemon Trees is trying to improve its presence in the luxury segment, and it is also increasing its inventory through management contracts. So this will boost up the revenue of the hotel chain. The company is also set to benefit from the significant sectoral tailwinds at present, and the MOSL is expecting that the company will emerge as a large and stronger player because of this. Also, they are expecting that the room renovations at present that are taking place will add and aid to the average revenue per room growth. Also, the company is expected to benefit from key markets like NCR and Mumbai, where we are expecting dynamic changes, and we also have seen recent openings of mega convention centers like Bharat Mandapam in Yashobhumi in NCR and Geo Convention in Mumbai, and because of this, the footfall for these hotel chains is going to increase. Also, in Mumbai, they have recently launched Aurika Sky City Hotel, which is a premium hotel near the international airport, and it is expected that the revenue and EBITDA contribution from this particular hotel is expected to grow at 21% and 23% respectively by FY26. Also, they have a strong pipeline in progress of approximately 3,354 rooms and will be operational by FY27. They've also stated some risks like decline in MICE activities, downtrend in tourism, and maybe lower than expected traction in Mumbai. However, overall, MOSL has stated that while the demand for these cities in rise, we're seeing a lower than expected supply, and that is why hospitality sector and Lemon Tree as a whole will benefit from it.
Right, so that's going to be interesting to watch out for. A 38% CAGR growth between 23 to 26 is what we're watching out for. Devarsh, what's your view with regards to where Lemon Tree Hotel goes? And apart from that, any other picks from the same sector?
Right, so we have a buy rating on Lemon Tree. Lemon Tree has strong expansion plans to build its portfolio. They have given a clear guidelines roadmap till 2027. From around 8,760 rooms, about 95 hotels, they want to scale it up to about 12,500 rooms and about 140 hotels. So we are seeing an environment where there is a strong push towards tourism. We are passing through the wedding season and festival season. Strong average revenue, room rates are there. Healthy EBITDA margin are there. Improvement in the occupancy is leading to a lot of growth. And in the next couple of quarters, we don't expect major capex. They are going to focus on asset sweating and a little bit of deleveraging because recently they have done capex like what you have mentioned, Aurika in Mumbai. And these new properties are likely to drive growth, and we had a coverage on this stock. We have a coverage on the stocks.
Right.
Our target incidentally is, I think, 125, which was achieved. We will again come out with a higher target, I believe. So we ask investors to continue to remain invested in this space. Overall, we remain bullish on the tourism sector.
A positive on the tourism sector. Thank you, Devarsh, for sharing your views on this one as well. But let's quickly slip into a short break. Lots more lined up on the other side. Please stay tuned to NDTV Profit, and you're watching Hot Money.
Welcome back. We now take stock of Ultratech, which is in focus, and this is on account of its Q3 domestic sales update. We have seen an uptick of around 5% on a year-on-year basis, and consolidated volumes have jumped around 6%. The question is, what do we do with an Ultratech cement with respect to the market? How do you compare it to its peers, and where does it stand by itself in terms of the outlook going forward? Devarsh, what's your view on Ultratech cement going in? How do you view this one?
So we are bullish on the cement as a sector, and Ultratech being a clear market leader there is no doubt that it is a must in any portfolio. We know that the government, we are going into the elections, and obviously the focus is growth, focus is to show the development, infrastructure development, and that is the visible sign of growth. So we continue to expect that a lot of expansion in infrastructure projects will happen. We are seeing increase in demand from the real estate side, the affordable housing side, and commercial properties also. Strong growth is seen by most of the players. Last quarter, majority of the cement players actually chose to pass on the benefits of margin and increase the volume. I think now that has stopped. We'll see good traction going ahead in the numbers. And Ultratech being a leader, I think it should continue to remain in the limelight. Consolidated about 6% YY growth, about 27 million ton of YY in the third quarter is more or less in line with our expectation. Overall, white cement we expect about 18% and about 5% growth in the next quarter as well.
Right, so that's with regards to Ultratech. The stock, though, is under pressure. 2.5% is the kind of cuts that you're seeing on this counter. But moving on to the FMCG space, interesting moves now. Let's pull up a HUL and Nestle on the screens. If you see from a Nestle's perspective, the GST demand and the penalties, that is something which is in focus, on the back of which the stock is down 1.5%. Let's pull up on Nestle as well on the back of the GST demand. That is down around 0.3%. But clearly, Devarsh, from a consumption perspective, volume growth perspective, how are you looking at both these counters, and what's your expectation?
So at the beginning, I'd say we have a reduced rating on both of them. HUL volume growth about 2%. 3 years CAGR, I think 4 years CAGR of volume growth is about 3%. This year we saw rural recovery, which was slow, and uneven rain, deficit rain was there. Many of the prices in, say for the case of Nestle, maize, sugar, oilseed, spices, green coffee, all have been spiked. So the margin expansion which we saw, about 250 basis point margin expansion which we saw in the last quarter, may not be sustained this time. Overall, valuation-wise, if we value 47 times September FY25, there also we are getting targets about 20% lower from here. So we are cautious on the sector. Stocks like Nestle has run up because they have announced a subdivision of its face value from now to 1, and that is a good reason to actually liquidate your holding. I think they will be available at a lower valuation in future.
Right. All right, Devarsh. Well, we'll leave it at that. Thank you so much for joining us and taking us through your views on the several stocks and sectors that we've spoken about. And with that, it's a wrap on Hot Money. But don't go anywhere. Lots more lined up. Stay tuned to NDTV Profit, and we'll keep bringing you more.